Hi, everyone. Welcome to our workers' comp webinar here. My name is Jacob Cole. I'm the marketing coordinator here at CID. Today, Darby Fisher, our work comp underwriter, will be sharing her expertise and helping you write more workers' comp. She'll be going over the specific learning objectives in just a second, but before I pass it off to her, I wanted to quickly go over the logistics of this webinar. So as you can tell, you're all muted, but there's a chat feature. So you can type your questions in at any time and we'll answer them throughout the webinar. Also, a short survey will pop up after the webinar so you can help us improve and do these webinars better for you. So we appreciate you taking the time to fill that out. And without further ado, I'll pass it off to Darby.
Good morning, everyone. So today I will be teaching you some successful strategies for writing more workers' comp. But first, I briefly wanted to touch on how workers' comp is doing in comparison to other commercial insurance. As we're all feeling it, for those of you that write commercial insurance, it really has become a harder to place arena, with rates reflecting ongoing higher premiums and many different coverages and classes of insurance. The good news is that workers' comp is one of the most stable coverages in both underwriting appetite and class code ratings. So it's still a very competitive environment to participate in and a good place to focus. So by reviewing a workers' comp submission case study today from submission to binding, I'm going to be providing you with some strategies and underwriting insight that will give you a competitive edge in order to obtain a quick quote turnaround, enabling you to write more workers' compensation. So some of those objectives are going to be learning how to identify potential underwriting hazards, the actual underwriting information needed to get a quote, learning key strategies for securing the bind order, and finally, I'll leave you with some good classes of business to target. So we're going to jump right in and review the underwriting information needed to obtain a quote. While this may seem rudimentary to you, I receive incomplete applications daily, which causes me a lot of labor and time. So I know it must be causing you extra labor and time as well. So in this slide, I've included what is necessary to quote for workers' comp. All of this underwriting information is going to be crucial in order to provide your insured with the accurate, competitive, quick quote. So as for the 130, make sure to include all of the requested information from the entity type to the years in business, the ownership information. A lot of times there's some information left blank that you end up having to go back and retrieve. The last thing is going to be that business FEIN. So I receive applications that are missing this quite often. And with workers' compensation, you cannot quote a risk without the business FEIN. So if it isn't provided on the application, you're already wasting time going back and forth trying to retrieve that, as you aren't able to do anything without it. So either go and get that information up front and wait to submit the risk until you have the FEIN. To better underwrite the risk, you and I both need to understand the business operations so we can place it with the most competitive market where this class of business is doing well. So to ensure the quote being provided is the most competitive and has been properly reviewed, provide the business operations and employee duties on the application. There's a section on the Accord 130 that asks the nature of the business, or it can be provided in an email, but make sure to obtain and provide that information. I recently had a food service submission that didn't provide a description of business operations. And for California, as you may know, the food service has broken out into many different classifications now, from full service to catering to fast food restaurants. So because I couldn't locate a website or any additional information online to determine what the business operations were in order to classify the risk, I had to go back to the agent to request additional information. So this risk, it ended up being a food truck operation, which changed their eligibility with some of our markets. My point of this being that providing the business operations and characteristics up front will help to potentially classify the business and quote the risk quickly with the best market, providing you with an accurate competitive quote. The next is going to be supplemental applications, which are requested for higher exposure risks such as trucking, contracting, manufacturing, and healthcare. They require additional underwriting and questions to determine eligibility. So our agency has created an easy one-page supplemental application. It's available on our website, and it includes all of the eligibility questions for that class of business. So before you submit a risk, go ahead and check out our website to see if a supplemental application for that class of business is available, as it's likely I will need additional questions to be answered. And then in regards to coverage history, it's another big issue that causes me the most extra labor due to the lack of information provided. So I want to make it super clear so that you can use this to assist you in obtaining a clean application. So if we're working from an effective date, meaning the insured has coverage in place, then loss runs are going to be required. If we're working from a lapse in coverage, the date and reason is required along with the loss runs prior to the lapse. And then if it's a new venture or first time obtaining coverage, we're going to state that on the Accord 130. So your objective as an agent is sales and to write more business by being knowledgeable and efficient. So asking the right questions and obtaining all of the underwriting information needed up front is going to save yourself time, avoiding the back and forth with the underwriter and the insured. So now that we've gone through the underwriting information needed, together we'll review a workers' comp submission case study to learn how to underwrite a higher hazard risk and the strategies on how to secure a bind order with the information received on the application. So knowing how to properly underwrite a risk with your carriers and gather the requested information up front from the business owner is going to be imperative to building your book of business. So the bulleted items, they give me a general idea of the business structure. This is going to be asked of any class of business. So those should be a given to analyze when you're underwriting and submitting to your markets, such as the claims activity, seeing if they're experience moderated, maybe the payroll is going to give you an indication of where the premium may lie, or the insured's class of business. So all of these are things to be looking at when you're receiving a submission, and this can go for a smaller premium or hazard risk, such as a retail store, to a higher hazard or premium risk, like an artisan contractor or trucking. So when you get into the higher hazard risks, such as a contracting exposure, there's going to be additional details you'll be finding out when going after high exposure businesses and larger size premiums. So additional analysis and underwriting is required, and it's going to be your competitive edge because it's more than just price when you get into this size of business. For a contracting risk, there's more determining factors on whether the carrier is going to write it or not, as opposed to a smaller business exposure such as a retail store. So the first thing you want to determine when you get a contracting exposure is if the business is an artisan or general contractor. That way you can get an idea of how many markets are going to be available. So based off our insured's name, I know that this is a artisan contractor, which gives me a little bit more expansive list of carriers to quote the business with. A few types of other artisan contractors are electricians, plumbers, framers, landscapers, drywall. So CID does specialize in artisan contractors, and we're really competitive. So if you have any risks that need quoting, feel free to go ahead and submit them. So on the flip side, we do have our general contractors that I want to briefly mention. As they are those higher to place risks because they have a higher tendency for more claims to occur. They have a subcontractor exposure often exceeding carrier guidelines. So if you have a contracting risk that is a GC, just making sure to underwrite it properly to determine where you can place it is going to be really important. So you want to anticipate the questions to be asked when quoting, getting to a place where you know what the carrier needs in order to provide you with a quote gives you a competitive edge. So a few things I'm looking for on a contracting application is if there's a subcontractor exposure, any work above or below ground level. All of these additional underwriting questions need to be answered, and you're going to find them answered on the supplemental application. So make sure you're getting that up front. Utilize those resources that make it easy for you to quote and bind the business. The next thing I'm going to be looking for is if the insured's filed with the contracting state license board to ensure their license is up to date. For contracting risks in California, the law requires that people who act as contractors um, are licensed by the CSLB. So if the insured's license was suspended, there may be issues obtaining a quote. So once I've gotten those general things checked off my list, I'm now looking at the bulleted information, their physical locations, how many employees they have, their payroll figures to get an idea of the premium range that this may fall under. So you'll notice there's a few class codes listed on the payroll section. There's two classifications for painting, 5474 and 5482, and they're broken up by the employee's hourly wage. So it's something you'll need to know when you're quoting a contracting risk. A lot of times for contractors, the class code is broken out by hourly wage. So make sure that's listed on the application you receive. Otherwise, the carrier or the agent you're working with to underwrite the risk is going to have to go back and ask for that information. If for reference, if you have a copy of the insured's current deck page and their payroll records, you can confirm if the employees were classified correctly. So after ensuring that payroll and class codes are correct, next, and one of the most important items to review is the claims history and trade experience. So how many years of experience or trade does the owner or employees have? This can also be a determining factor when asking for additional credits to be applied for the quote. So our case study has been in business for 7 years with 5 claims, one still being open. Based on that information, the X mod is assigned at 112%. So it's not terrible, and it's important to turn things around before the experience mod gets too high and then may take years to get back under 100%. So once you lose sight of it, it really can escalate. And as long as the claims are open, more costs can incur, which will inevitably increase the mod. So getting that claim closed as quickly as possible and working with the carrier to do so will help mitigate further debits on the policy. Based on their claims history, their experience mod, as we mentioned, may continue to increase, but your competitive edge can be presenting loss control carrier services. So I'd be looking for information on the claims as to whether the injured employees are still working for the business, if the insured has implemented any safety training or measurements. All of those is going to help, as the carrier may ask for additional information on the claims to determine eligibility and if additional credits could potentially be offered to the insured, and then presenting loss control carrier services to the insured as well. So that way they know that you have a plan in place to help them mitigate any further debits on the policy. Something to remember is that the carriers want the business just as much as we do. So providing maybe some additional information on the claims if it doesn't look great, and just, providing maybe a list of what the insured has implemented since the claims to turn it around. It can go a long way with management at the carrier level because they do want the business as well. So you're also noticing the insured has been with 3 carriers in the past and has a lapse in coverage. Again, is this carrier or insured initiated? Were they non-renewed due to a class of business no longer being written, or were they canceled? The lapse in coverage is coming from non-payment or non-compliance. The lapse in coverage, it's not unusual these days. Everything's slowly getting back to normal. We're finding in the last year or so, a lot of contracting business are just getting back on their feet and hiring employees again. Things are picking up. So carriers are aware of the current industry And while in the past they may have declined a contracting risk with a lapse in coverage, they're more likely to quote the business now and can still present a competitive quote. So you can win an account of this size with this type of exposure by knowing how to deal with the current marketplace, being able to identify potential additional services you can provide to the business owner, such as in this case, loss control services or the potential for additional credits to be applied, and making the insured feel knowledgeable about the business and the carrier that they inevitably would be binding with. So your job, as I mentioned, is to save the business owner in more ways than just pricing. So this list you're reviewing are some of the key work comp potential underwriting hazards that may get the attention of the business owner. The first being potential misclassification of employees, which can lead to problems at the time of the audit. So if an employee is classified incorrectly and maybe in a lower rated class, the insured could end up owing premium to the carrier. On the other end, employees may be classified in a code that is rated higher, where they can be moved to a lower rated one and inevitably saving the insured premium. As we mentioned in the case study, this is really common for contracting risks where the wage determines the class of business for that employee. So being cognizant of that and aware that, hey, maybe I can save my insured money because, their wage actually fits into this class code, or, actually, this employee needs to be moved to a higher rated class code to save them premium at the time of audit. If your insured has exposures that are rated high, you can also take the risk to markets where you know are going to apply additional credits, potentially based off of years in business, maybe the territory they're rated in, or schedule credits if you have a clean claims history. So knowing your markets well is going to give you an edge over another broker. You can always expect with any contracting or manufacturing or janitorial exposure to be rated higher than another class. So balancing that out with markets that do well with that class of business will help you secure a bind. And on the flip side, knowing which business profiles maybe wouldn't qualify for additional credit. So like that small retail store or businesses that are typically around $2,500 in premium, potentially the carrier won't have authority to apply additional credits. So when you're quoting a smaller size of business, it's important to take the risk to markets where the class code is really competitive to offset that. So with risks that are assigned a higher mod or have poor claims history, your competitive edge is going to be able to provide carrier resources and information on how to mitigate claims in the future, inevitably bringing their mod down, which we discussed in more depth throughout our case study. Some carriers may make their decision on writing the risk based on the severity of claims and others on frequency. It is different for each carrier. So if you can identify the cause of the claims occurring, you can help provide recommendations and resources for the business owner. So some key strategies for securing the bind order. You need a strong close. Making a formal presentation that shows premium is competitive because of aggressively priced rates, maybe the insured's experience mod or clean claims history makes it easy for the insured to see everything clearly because it can be overwhelming for an insured to have all this information thrown at them at once, especially for one that knows nothing about insurance. So being able to speak knowledgeably about classification and rates applied or carrier services such as claims management for those higher exposure risks will help you in securing the bind. The message to be getting across to the insured is that they can trust you to do your job efficiently and knowledgeably, ultimately saving the insured money and managing their policy successfully. And by incorporating some of the extra underwriting steps on the front end, it may take you a little bit longer to underwrite the risk, but in the long run, it's going to help you to build premium volume within your book of business. So I do want to point you guys in the right direction before we go on what classes of business are having the most success in the current marketplace with competitive rates and premium. So just touching on a few, those restaurants such as fast food and full service are always doing really well with our markets. It's typically a business exposure where you can obtain a quick quote. The same goes for retail stores, which is a very expansive class from nail salons to laundromats and barbershops. Trucking operations, I don't have listed there, but we actually are doing well with, and our markets have opened up that class of business. They require a little bit more underwriting review, but our markets are pricing them competitively, and the rest of these classes of business are ones to be going after as well. So these are trending classes right now that will do well for your book of business. So I appreciate everybody taking the time today. Hopefully you learned some successful strategies to go take to your office and implement. I'm going to give this back to Jacob now.
All right, thank you, Darby. If anyone has any questions that weren't answered during the webinar, now is the time to chat them in so we can answer them before we sign off. And Darby, I do see that there's one, I think it's a two-parter question. It's a little long, so take a second to read that. And for everyone else, after we do sign off, I encourage you to browse our website. We have tons of tools for you in your office to use, marketing materials, proposal templates, fillable applications, online quoting options, and a ton of different webinars for you to watch. So yeah, don't hesitate to reach out to Darby after the webinar. Her contact info is on the screen there. Darby, did you want to take that question?
Yeah, I do. We do have applications for artisan contractors on our website. In regards to general contractors, at this time, our markets are not writing that type of business operation. So it's just artisan contractors that we have a market for. In the second part of that question, it's a little bit more of an explanation answer, and it's going to vary based off of the market. But we do. If you wouldn't mind, I will go ahead and email you some information that we can talk about separate from the webinar in regards to negotiations for claims.
All right, perfect.
I see a second question that just entered in the chat.
Mhm.
We right now are not appointed with State Fund, but I do know they are one of the markets who are going to write those harder to place risks, such as the general contractors. Right now, our markets that we're writing really competitively with are AmTrust, Employers, Hartford, Guard, Pi, Travelers. So those are markets right now that we have access to, and a few others that are doing really well and writing competitively.
Perfect, yeah. And we're always looking for new markets to add to the mix. So yeah, if you guys have more questions, type them in. Looks like one just came in. I'll send that to you, Darby. But yeah,
Okay.
please be sure to stay on so you guys can complete the survey after the webinar. We're always looking for ways to improve. Yeah, so I think that's it. Darby, if you want to answer that question, and then I think we're probably going to log off here. Oh, we see your email here,
Oops,
Darby.
sorry guys. Yes, we do have carriers that are willing to write a business that has sales in other states. It just depends on which states those are, but if you have an application or if you want to send me an email with those specifics, go ahead and let me know, and then I can give you a more definitive answer.
Perfect. All right, I think that's going to do it for today's webinar. So thank you, Darby. Thank you, everyone, for joining us. And yeah, contact
Thank you,
Darby with any
everyone.
questions. Thank you.